In today's globally transparent financial environment, the concept of tax havens has significantly evolved. No longer associated with secrecy or avoidance, modern tax-friendly jurisdictions are now recognized as strategic tools for legal tax optimization. For entrepreneurs, investors, and high-net-worth individuals, choosing the right jurisdiction may lead to efficient wealth structuring, reduced tax exposure, and enhanced asset protection. This article provides a current analysis of the best tax haven countries in 2025, those offering substantial tax advantages within a stable legal framework. A tax haven should be defined by low or zero taxation on income, capital gains, dividends, or inheritance, a stable regulatory and political environment, legal frameworks that allow for effective asset protection and financial privacy, a pathway to tax residency or permanent relocation. Importantly, benefits arise only when tax residency is properly established. Owning a passport or investing without relocating or shifting tax residency may not yield material advantages under global tax reporting standards like CRS or FATCA. Domestic jurisdictions within larger countries offering localized tax benefits, e.g., U.S. states with no income tax. International independent countries with favorable tax policies and legal banking frameworks. Offshore small, low-tax jurisdictions that attract foreign capital and offer corporate or individual tax relief. The Cayman Islands should be considered for complete personal and corporate tax neutrality. Tax profile: no personal income tax, no corporate tax, no capital gains tax, and no inheritance tax. Business environment: known for financial services, offshore funds, and structured finance. Compliance considerations: transparent regulations are in place. Compliance with international standards is required. Residency: long-term residency options exist, but are often capital-intensive. The Cayman Islands may be suitable for those seeking full tax exemption with access to world-class financial infrastructure. Bermuda can be used to achieve legal tax savings in a stable and upscale environment. Tax profile: no income tax, capital gains tax, or wealth tax for individuals. Corporate tax: a 15% corporate tax applies only to large multinational companies, as per OECD thresholds. Residency access: long-term residency programs are available with specific investment requirements. Sector focus: insurance, reinsurance, and finance sectors are dominant. Bermuda may suit those prioritizing legal certainty, a high standard of living, and access to global financial markets. The Isle of Man should be considered for structuring trusts and businesses under a favorable tax regime. Tax profile: 0% corporate tax for most companies. No capital gains tax, inheritance tax, or stamp duties. Legal setup: straightforward company formation and trust creation. Residency: residency is obtainable with minimum physical presence and income requirements. Banking: stable banking system with access to UK and EU financial networks. The Isle of Man may benefit investors and business owners managing cross-border assets with confidentiality and low tax obligations. Panama can be used for territorial taxation and foreign income exclusion. Tax profile: only income earned within Panama is taxed. Foreign-sourced income is exempt. Capital gains: no tax on sale of foreign assets. Residency options: friendly nations, visa, and other long-term options with low barriers. Banking: advanced banking system with privacy features and dollar-based accounts. Panama may be ideal for international entrepreneurs with foreign-sourced income seeking to reside in a Latin American financial hub. St. Kitts and Nevis should be considered for its tax simplicity and asset protection frameworks. Tax profile: no personal income tax, capital gains tax, or inheritance tax. banking and trusts. Robust legislation supports offshore trusts and confidential banking. Corporate tax. 33% corporate tax applies to tax-resident companies with global income. Residency. Multiple residency and citizenship options are available. This jurisdiction may benefit individuals focused on personal tax minimization and international asset protection. Antigua and Barbuda may serve as a low-tax base for entrepreneurs and retirees. Tax profile. No personal income tax, wealth tax, capital gains tax, or inheritance tax. Residency requirement. Tax residency may be obtained with just 30 days of presence annually. Fixed tax option. Permanent residents can pay a flat annual tax of $20,000 US. CFC rules. Absence of controlled foreign corporation laws supports offshore structuring. Antigua and Barbuda may be used for permanent relocation with minimal tax exposure and administrative requirements. Jersey may be evaluated for high-income earners seeking partial tax relief in a European setting. Tax profile. 20% personal income tax rate, but just 1% on income above £1.25 million under the High Value Resident (HVR) program. Capital and wealth taxes, not applicable. Corporate setup. Straightforward incorporation, often used for funds and investment vehicles. Residency, HVR status, comes with specific property and income thresholds. Jersey may benefit ultra-high net worth individuals with consistent income and a preference for legal EU-aligned frameworks. The UAE can be utilized for total personal tax exemption and corporate planning. Tax profile. No income, wealth, or capital gains tax for individuals. Corporate tax. 0% in free zones if requirements are met. 9% standard rate otherwise. Residency. Residency obtainable via business setup or investment with no minimum stay. Infrastructure. Modern legal, business, and financial systems. The UAE may be optimal for those requiring mobility, zero personal tax, and business-friendly structures. In 2025, the best tax havens are no longer defined by secrecy or evasion, but by efficient structures for legal tax planning. Jurisdictions such as the Cayman Islands, UAE, Panama, and Switzerland continue to offer flexible frameworks for reducing tax burdens and protecting global wealth. Careful selection should be based on residency rules, international tax obligations, personal goals, and legal compliance. Working with qualified professionals to design a compliant tax strategy may reduce exposure, protect capital, and support financial independence. Tax havens, when used properly, are no longer hiding places, but strategic jurisdictions for lawful and structured global wealth management.